it's just mind-boggling to me that I had been trapped in these golden handcuffs. I had no time. CPA would tell me, Dr. Cobb, don't complain about writing these big checks. It just means you're making lots of money. Obviously I needed a different CPA, but I wasn't smart enough to know it at the time.
Hi, I'm Tim Bratz, and every week I sit down with the top influential entrepreneurs in the country to discuss how to leave a true legacy in all things happiness, health, wealth, and wisdom. This is the Legacy Podcast. Hey guys, welcome to the Legacy Podcast. Today I have my good friend Tyson Cobb here. Tyson has been a guest on the Legacy Podcast before. Tyson is a world-renowned orthopedic surgeon and pivoted into real estate investing several years ago. His net worth has skyrocketed since then. And specifically, he raises a lot of capital for syndication deals and different types of investments. And so we were just talking offline. They had hit a big goal. I'll let Tyson share what that looks like in 2025. And they have some real big ambitions for the capital raising in 2026 too. But what I really want to dive into is Tyson's new book. He released a book called Wealth by Design, and it goes through his proven bones method, which I love the reference to the orthopedic side of things. Hit Amazon bestseller right out of the gate, and it can be found on Amazon. But we're going to go through BONES, what that means in order to build long-term that legacy wealth that this podcast is all about. So, Tyson, welcome, buddy.
Thank you so much. Appreciate the invitation. It's a pleasure to be here.
Yeah, man. So big year in 2025, big ambitions in 2026. Anything you want to talk about on that front?
Yeah, so our goal was 30 million, and we, thanks to you letting us in on one of your raises in December, we closed the year funded at 36, so we're pretty happy with that.
Amazing, man.
We set our goals on 100 million for 2026. So
is that really the goal?
yeah,
That's incredible.
yeah. The team is cocking their hammers, and we're going to go hard in 26. So
I love it, man. No, I'll tell you what, you guys have been very active, very moving forward on some things. Reaching out to me, saying, "Hey, what else we got? What can we help you guys out with?" And I know we're going to be hopping on and doing a lot more together. So super excited for that. Super excited to continue doing business, raising a lot of capital, helping out a lot of investors, letting them know about the world of alternative investments, that they don't have to be stuck in the stock market. Stock market's had a good run over the past few years. It's just it's not sustainable, right? Like valuations are double what historic standards have been, which tells you that everything's overheated, inflated, and to put their money into fixed assets, whether that's real estate or businesses, and at least having an allocation towards those things and not just all in the public markets is wise investing. So it's super cool to see you're making a big impact, and the value that you're providing to the market, obviously, the market needs it, right? And it's responding in a big way, which shows you that you're doing the right thing. So, man, congratulations on that side of things.
yeah, thank you. We really enjoyed raising on your smart management deal. At one time I was a little nervous to move into something that I didn't understand quite as well, and so I kept my focus pretty limited. But what I found is that, as you just mentioned, investors want to diversify. They want to get in some other offerings. Your deal cranked out a ton of depreciation, which people needed in December. So, that worked out really, really well. And you point out something that that I think most of us are aware of, and that is the stock market's way overvalued, and they're giving multifamily away in a lot of areas right now. So a lot of these deals that were underwritten at a mortgage way under what it is now are coming due, and they're upside down, and they're forced to sell, and there's no buyers at the table. So it makes you wonder if you shouldn't be taking a little money off the one table and putting it on the other based on how it's valued. Something to think about.
I agree, man. Hey, listen, very few people know more than I of how tough it's been over the past 3 years in the multifamily world. It's just been arrow after arrow and hurdle after hurdle, and people, throwing stones nonstop. Literally every single line item on the expenses of an apartment complex have skyrocketed. And it's like, damn, can we get a break? And the good news is everything indicates that multifamily is going to crush the second half of this decade, right? It's going to be doing amazing. You don't have all the tire kickers involved like you did over the first half of this decade. The tide going out has trimmed a lot of the fat in the industry, and right, there's a lot of just jadedness. There's a lot of tiredness. There's a lot of fatigue in the operations where people are like, dude, let me just walk away for the loan amount. Let me walk away for give me 10 cents on the dollar for my money, and let me just get out of this deal because I can't stomach all the headaches and all the phone calls and all the arrows, right, that keep on coming. And so I'm seeing people walk away nonstop from deals, and even the banks are willing to be a little bit more flexible and waive some fees and or take a discount on the payoffs on some of this stuff. So if you are active, if you are still making offers, you're not competing with as many people. You're able to then negotiate better terms with the seller. You're able to negotiate better terms with the lenders, and or take over loans and get creative on stuff, not have to bring as much money out of pocket. And there's a lot of opportunity there. And at the end of the day, the housing supply is low. The demand is still high. There's no more housing supply coming on. We're going to find ourselves 7 million housing units short by 2028. And not only that, but anything that is being built is just it's all luxury stuff. So there's no affordable housing at all. And that's 50% of the country, man, that can't afford to live. They can't afford to buy a house. They can't afford to live in a luxury apartment. They need this, and it's not being built. So as demand continues to increase, supply stays low. I know rents have been stagnant for the past like 2 years, but we're already seeing rent growth, and I've seen reports by Crexy, LoopNet, and a lot of big commercial real estate firms that are showing consistent rent growth of 3 to 4% annually over the course of between now and the end of the decade. So I think the multifamily stuff's going to do really, really well.
Yeah, I was listening to two senior investors recently. They were talking about what they would have done different. They talked about they wish they would have bought a lot more in '08 and '09. And, that's where we are now. People have been beat up. There's blood in the streets. There's no buyers at the table. Multifamily is not sexy right now, but, I think 26 is going to be a year to buy. 27 will be a transition. And as you mentioned, 28, I think it'll be on fire again. So
Agreed.
that's what we're hoping anyway. I don't have a crystal
Yep.
ball, but that's what the numbers would suggest.
Yeah. Hey, and guess what? If it takes another year, takes another 2 years, you're buying cash flowing properties. You're buying things that are above water from day one, and you can ride it out another 12 months or 24 months or 36 months if you need to. That's the beauty of owning rental real estate if it's structured properly. I think where a lot of people got jammed up is, they either got debt or set expectations that they would get out of these deals in 3 to 5 years. And when you get debt based on that, and then your back's against the wall when 5 years comes up, it's not enough time to get out of a rough economy. You really need a 10-year debt cycle or debt term in order to then go through any sort of bad economic cycles. Like if you take a look at '06 at the peak to 2012, which was the bottom of the market, by 2016, those values were back up. So, but if you had to sell in 2011 or 2012, you were in a tough spot. And that's kind of like, where we're going to be over the next 12, 24 months is you don't want to sell right now, like ride it out. But you guys acquiring things right now with the 5-year time horizon and or, extend it out a little bit longer, you're going to be in a good spot. So I think 2030, 2028, 2029, 2030, it's going to be roaring. So it's simple economics, supply and demand, right? You can talk about interest rates, you can talk about labor costs, you can talk about inflation, you can talk about all that stuff. But the reality is there's so much demand, there's not enough supply. And when that happens, prices go up, values go up, rents go up across the board. So good stuff, man. Let's dive into the new book. Tell me about Wealth by Design, and then let's hit through the Bones Method.
Yeah, I'm gonna just give you a little background about me. So as you know, I'm an orthopedic surgeon, left my group in 2019, dropped back to 1 day a week. And I was expecting things to kind of taper off. You would expect that, right? Going from full-time orthopedic surgery to working 1 day a week. I was
Financially, you're talking.
correct, yeah.
Yeah.
And I was in pretty good financial shape, so I wasn't too worried about it. But it didn't taper off. It actually went drastically the other direction because you started investing and they did pretty well and mitigating taxes. Once you get below working half time so that you can qualify as a real estate professional, it's a game changer on wealth growth just by mitigating taxes. And as you know, uh, real estate does that very effectively.
Hmm.
It don't have to be a rocket science to make it work with real estate. But you know, it, when I saw, for instance, I bought a gas station that first year. Bank paid for 80% of it. I paid for 20%. I got all the depreciation, didn't pay any taxes, first time in my entire life, and got all the income. And I'm like, this is like cheating. I can't even believe this is legal. I mean,
Yep.
the bank really owns 80% of this. I just put up 20%. I mean,
Yeah.
right? You would think
Yeah.
logically that the bank would take 80% of the depreciation, but no, I got the whole thing.
Yep.
And so, as I went into real estate and learned more about investing, a lot through yours, I've been in your mastermind longer than I've been in any of the groups that I'm in, and it's just mind-boggling to me that I had been trapped in these golden handcuffs. I had no time, and I was being brainwashed by my financial advisor, investing in the stock market, paying incredibly high taxes. CPA would tell me, Dr. Cobb, don't complain about writing these big checks. It just means you're making lots of money. Obviously I needed a different CPA, but I wasn't smart enough to know it at the time. But once I transitioned in and saw what was possible, I wanted to write a book so people could basically follow the path because it's not rocket science, but you do have to make a transition. So came up with the Bones acronym, the B's for believe, and as you know, you've got to have the right mindset. Go to a ton of your meetings, and you always have good speakers there, and many of them are pushing the mindset, and you have to have that to start.
This episode of the Legacy Podcast is brought to you by Smart Management Property Management Software. If you own rentals or operate a real estate business, you don't need more deals. You need more clarity. Most operators are leaving money on the table, not because the asset is bad, but because the operations are loose. Rents, expenses, payroll, maintenance, it's all spread across systems, spreadsheets, and inboxes. Smart Management brings that together in one place. It gives you real-time visibility into your cash flow and operations so you can tighten up what's already working. When you see the leaks, you fix them. And that's how you make more money on the properties you already own. No guesswork, no waiting on reports, just cleaner data and better decisions. If you want to run a tighter operation and pull more profit out of your existing portfolio, check out Smart Management. Links in the description. Now, back to the episode.
So the first thing that had to happen is I had to believe that I could do something besides orthopedic surgery, because the system will kind of convince you your financial investor is going to make better choices than you, your financial advisor. Your CPA is doing everything he can do to mitigate your taxes. That's not true. And you don't know these things because your partners are doing the same things that you're doing. And so just getting the mindset right, and believing that you can transition is the first step.
What would
Uh,
you
the,
say are some like tools or resources for people to like start down that path or really get that, whether it's belief in themselves or borrowed belief from somebody else?
well, there's a ton of good books. Obviously, joining groups like your mastermind is a good way to do it. We have a network where we teach a lot of different stuff, and so I think you just have to surround yourself with the right people, and that's the O is for organize your network, and who you surround yourself with is critically important. And as I mentioned, I've been in your mastermind longer than any, but I've been in and out of a bunch of them, and they're not all the same, as you know, and you'll learn different things from different people, and as you expose yourself to different networks, you'll find partners that you can do things with, and if you're not intentionally working on your network and spending a little money to make that happen, you're going to slow your growth substantially. So, I mean, I think some of the best return on any of the investments that I've made is joining masterminds like yours, so that
Hmm.
it just catapults you to the next level. and you'll learn things that you never thought possible. When people come in and talk about stuff that you just don't know. You don't know what you don't know, and that's what masterminds and networks. They help with that a lot. The N is for nurture your knowledge. I mean, obviously, you have to make that transition, and that was a little difficult. So I went from being like the master in orthopedic surgery. I traveled all over the world teaching people how to do minimally invasive techniques. I have patents on instrumentation for surgery. So I went from that level of being the master and teaching labs literally all over the world to being the guy sitting in the back of your room having no idea what you guys are talking about. I'm back there Googling
Mhm.
terms, trying to figure out what it is that's being said. And it took maybe 12, 16 months to transition so that I started getting, comfortable. And there's audio books and there's podcasts and there's masterminds. And, the bottom line is I think most people, myself included at one time, I don't have time to do this. But the reality is you actually have a lot of time. What you don't have is you don't have free time. So you can't go
Mm.
spend time with your kids if you're a busy orthopedic surgeon because you're always somewhere else, right?
Wow, that's
But
good.
what you can do is you can, if you're up at 4 o'clock in the morning going to the gym, you can pop your earbuds in and listen to an audio book or listen to a podcast. And when you're driving to the hospital to make rounds across town, you can be listening to an audio book. And so, you just plug in and you utilize that time that you're, otherwise wasting. There's time between surgeries. Can you do what you want to with that time? No, but you can listen to an audio book. Uh,
Hmm.
and once you figure out how to make the transition, you get your time back. That's what I did. I just backed the time down that I spend doing orthopedic surgery, so I still get to enjoy doing a profession that I spent my whole life building. It's kind of hard to completely give that up. So I still get to enjoy that, but I spend most of my days doing exactly whatever I want with who I
Well,
want.
I'll tell you what, I think it's also really powerful for your story, right? In supporting your real estate business and your capital raising business, and say, hey, I'm still in the same boat with you guys, right? Staying relevant, still a physician. Um, it gives that relatability. I think you're that much more successful in your investing side of things by still doing that. So one, it feeds your fulfillment, right? It's something that you love to do and you're an expert at. And when you're an expert at a craft, you want to do that craft. And so it doesn't feel like work, to you. And then at the same time, it just compounds your success in whatever else you're doing, which is your capital raising and your investing side of things, creating opportunities, and um, it's more relatable because of that. So I think it's awesome.
Yeah. A lot of physicians feel like they're either working full time or they're retired. And the reality is you can transition. It's easier than you
Mhm.
think. And it's actually a lot of fun. As you move into real estate investing and alternative investments and just learning all the possibilities and what's out there.
That's one of the things I was going to reference in that. Can you imagine spending your entire career? I mean, obviously you can, but like spending your entire career doing one thing and becoming a master at that craft, and then being like, oh man, I got to start all over again at 40, 50, 60 years old and learn something new. I'm just tired, right? I don't want to do that, but I feel like there's this level of excitement that comes with it, especially when you can kind of pivot to something that, hey, uh, I could do this for the rest of my life because it's not that physically strenuous, and it's fun, and I'm doing something that really does leave a true legacy, and learning an awesome skill that I can then pass on to my kids. If kids, they don't want to be a physician, they can still go and buy a house or they can go invest their money. And like this is going to be something that's relevant and industry agnostic no matter what. So I'm sure there's a lot of that excitement that comes from a lot of the folks that are in your network.
Yeah, I enjoy learning new things. It was definitely a challenge transitioning because I have no finance background. I've bought some foreground over the years. Grew up on a farm and ranch, but other than that, no expertise. My dad didn't build houses and wasn't a realtor, and so there was no connection with any of that. And so it was busting into a whole new realm, but it was exciting for me. I enjoyed it. I like a
Hmm.
good challenge, and it was definitely a challenge, but it was a lot of fun.
Yeah. It's cool to see how the compound effect is really set in for you. Like you got in, started investing as an LP initially and trying to figure some things out, bought a couple of your own properties. But I mean, you've been doing this since what, 2018,
2019.
2019? So like, guess what, guys? We're 7 years in. it's not an overnight success. It takes years to plant the seeds, to cultivate those seeds in order to then finally see the harvest. And I mean, it goes back to the 10,000 hour rule, right? If you're working full time on a position, that's like 2,000 hours, right, per year that you're spending. And it takes 10,000 hours to become an expert at anything and really start seeing the fruits of your labor and the momentum that sets in like crazy. And look where you are, right? Like you dedicated a full-time effort to it. 6 years later, you raised $40 million and on track to then see the compound effect snowball even more next year or this year. Well, you raise another $100 million for different real estate deals, getting fees and or equity positions, GP positions into all these different deals for doing something that's very scalable and something that provides a lot of value to the marketplace. And so it's didn't happen in the first year, didn't happen in 2 years, didn't happen in 3 years. There was this borrowed belief that you got from being in the right rooms, from nurturing your knowledge, right? From all those things in order to then put you in a place where this knowledge, the network, the belief can compound over the past 5-6 years to put you in the place that you are today. So it's cool to see, man. It's been awesome watching you on the journey, and you deserve every bit of it because you've been working your tail off.
Yeah, so the ceiling effect is something that a lot of people don't realize. So, I made a lot of money as an orthopedic surgeon, but you can only see so many patients in a day. You can only do so many surgeries in a day. And that glass ceiling is real, but it doesn't really exist in what we do. It's certainly not to the same extent. So,
Mhm.
um, every year we're able to build and grow and just keep going. And, we won't have that glass ceiling the way that we had it, as an orthopedic surgeon. And, when you're doing syndications, you're working with teams, and it's very, very scalable. So, moving from where we were in 25 to 100 million in 26 is very doable, and I think we'll get there.
Love it. Love it. So talk to me about E.
So E's embark on investing. So it's basically you just have to take action. So obviously, you have to do the other things first, because otherwise you're going to take the wrong action. So you
Mhm.
don't want to do bad deals. So you do the first part first, and then once you get that done, and part of it is joining teams. So you don't have to know it all, right? It's been said that it's a team sport, and you only really have to be good at one thing. I mean, you have to understand all the various parts, obviously, but you know, from a team sport standpoint, the linebacker does what he does, the quarterback does what he does, and it's the same with multifamily. You're all sharing some of the responsibility, but you do have your area of expertise where you're actually shining. And that's what makes it so scalable, and you can just rev the engine and just keep going. And
I
yeah.
love it. No, I mean, 100%. Like, I didn't learn how to swim by reading about it in a book or going to networking events or even believing that I can swim. It's like you got to take action too, right? Like it's part of the process. It's part of by taking action, you learn a few things, you reflect on a few things, then you could take action again in a better way, more strategic way, more pointed of a way, and you get better and better and better. But you have to be doing both, right? And you can take better action by being in networking groups. You can take better action by reading about it in a book or listening to an audio or a podcast. But you need to be doing both of those things, right? You can't just be doing one or just be doing the other. You're gonna learn by only taking action. You're gonna learn by it's going to cost you a lot of time. It's going to cost you a lot of money. So you need to be educating yourself and being in the right rooms too. But how many people have we seen that get in the right rooms? They educate themselves to paralyzation, right? And they don't actually move, and they never have forward progress because they didn't take action. So you got to be doing both of those things at all times.
Yep, it's a balance. You have to work both sides of that equation, as you pointed out. The knowledge by itself doesn't get you anywhere. You have to apply that and take action. So that's critically important. But you want to do the first step first, and then apply the gas.
Mm-hmm. Love it. Bring us home with S.
So S is serve and give back. So obviously, as you turn things around financially, and I think it's a mistake to wait until you kind of made it financially. Uh, for the people that that can't serve from a financial standpoint, there's lots of ways you can serve, given your time and so forth. But I think when you start serving and giving back, it really brings abundance into your life. And
100%.
I think you're gonna achieve phenomenal growth that's beyond what you would think otherwise. You kind of have two things in action. You have the reciprocity thing that's working on one side of the fence, and you have the biblical underlying principle of, the more you give, the more you get. And whether regardless of what your beliefs are, I believe that's a principle that just exists and it's there for everybody to take advantage of. It's like gravity. You can believe it or not.
Hmm.
It's still going to affect you positively or negatively, depending on how you're utilizing it. But yeah, I think once you start making a conscious decision and being intentional about serving and giving back, it brings joy into your life, and it brings just an amazing amount of abundance.
100%. I agree. It's one of those things where you start working that muscle and hey, do it out of self-interest, right? Because you get what you give. So in self-interest, go give as much as you possibly can because you know it will come full circle. It is a universal, it's a biblical principle, but it's also a universal principle. Like this is a very real thing. And here's the thing. Nobody's ever gone broke from giving, right? Like
Right.
it
Yeah.
doesn't happen. It doesn't exist. You have zero fears on that front. You will not even realize that the money had left your bank account because you're going to see this positive impact, and there's going to be so many great things that happen by promoting and sharing and giving and paying things forward. And it's just it creates such a great ripple effect in your life and in the world. And it will come full circle. So
Yep.
it's I love that one. And you're big on it, right? Like you and I are talking about that all the time, and all your capital raises, you always started out by saying, hey, we're donating to this charity. Anybody who wants to donate, we'll match up to this amount, and da 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 da. And it's like every single one of your capital raises starts that way. And I give you big accolades, and you really commend you on that front because you're leading with success. So it's awesome to see, man.
Yeah, it's counterintuitive. I mean, you wouldn't think it would work that way, but it seems like the more you give away, the more you get. Money just shows up. It's like
Yep.
it just shows up where you weren't even counting on it. We just started a mastermind and picked up about 200 grand, literally in about 2 weeks. Uh,
Incredible.
and I mean, it wasn't really on my radar. I just hired a CFO, and he's like, "You need to do this." And I'm like, "Well, I've had a bunch of people tell me I need to do that, including investors that want a little closer contact and a group setting, kind of the inner circle, if you will." But I just didn't feel like I had the bandwidth. We're
Hmm.
super busy doing deals, and every day just is just a flood of new things that need to be dealt with. And he just put the structure together, and he's like, "Here it is." And I'm like, "Okay, like, I can't not do that." He basically just set everything together, and so we went for it. So yeah, there's no question. I mean, the more you give, the more you get, and it's just it's amazing how quickly things grow when you get everything tuned in right.
Love it, man. I love it. So bring us home on the book. As far as the book is concerned, BONES goes through that whole process um, and dives deep. How do you close it all out?
Yeah, so I basically kind of give my financial journey from wearing the golden handcuffs, having no time for anything, and but making a super high salary and paying a ton of taxes to the transition that we just discussed. And we talk a lot about tax mitigation strategies, mostly through
Mhm.
real estate, and that's your highest expense. Well, for orthopedic surgeons anyway, and it's the lowest hanging fruit. And people just they're not pulling the levers because they don't know. And It's just amazing to me that, we spent years with CPAs and, I had the same CPA that all my partners had. They're all smart guys. Um, but we were paying way too much in taxes and didn't really understand that there were other options out there.
Hmm.
And people don't tell you that. It's the same with your financial advisor. You're in the stock market and you're kind of a slave to what that does. And there's a lot of limitations there, a lot of tax related limitations as well. And I'm not saying you shouldn't have any money in the stock market. I still have money in the stock market, but you should be diversifying. If you look at Tony Robbins' portfolio, he has about 25% of his portfolio in the stock market. He has about 40% in real estate, and the rest is in other different types of alternative investments. And why does he do that? Well, he spent years studying the different markets, and he found that there's about a 5x difference between the long-term returns on the stock market versus long-term returns in private investing. And being able
Wow.
to kind of pull all that together, that was a lot of the book as well, is just trying to make people aware of things that they otherwise wouldn't know. So it's really written for orthopedic surgeons and other high income professionals because I think those people are probably wearing blinders worse than most people on the planet just because they're just head down taking care of patients and doing whatever it is they do every day and frankly getting bad advice from CPAs and financial advisors. So
Agreed.
you
Agreed. I mean, it's a desperate need. And again, goes back to the whole uh, you see the value you're giving in the marketplace because of how people are responding and how much success you're having in business, because it is a desperate, desperate need. People need it. And especially white collar professionals and physicians and dentists and doctors and uh, I mean, everything into engineers and architects and they just don't know that this world even exists. They're all high income earners and their CPAs specialize in what that is, but they don't understand this entire world of alternative investments and creative ways in order to offset their active income. It's awesome, man. It's awesome to see you're making a big impact in a lot of people's lives, and it's showing. And it's coming full circle. So, Tyson, where can people find the book?
It's on Amazon. There's also a lot of free resources on our website, timberviewcapital.com. We have a reading list there. We have FAQs. We have blogs. There's a ton of recorded webinars. We did a webinar last night on the Augusta rule, had a real estate savvy CPA on, and short-term rental. Rafa was on with us, and so we broke it down, and Rafa showed everybody how to find good comps and so forth. And so all of that stuff's recorded on our webinar list on the website. So a lot of free resources there.
Love it. And then where can people connect with you directly to invest through your deals and or learn a little bit more about the Cobb Club and your coaching, especially for white collar professionals?
Yeah, so my cell number's listed there on the screen, and shoot me a text anytime. Happy to jump on a call. You can set up a Calendly Zoom call on the website on timberviewcapital.com.
Awesome, man. Well, hey, I appreciate you being here. Thanks for all the insights on your new book. Congratulations on it becoming an Amazon bestseller. The first weekend it was released, and all the good insights, man, that you're always sharing. So appreciate you, appreciate your friendship, and just doing business and being on this journey together.
Yeah, thank you so much for the invite. Really enjoyed it, and appreciate all your mentorship over the years. I don't think I would have made the transition if it hadn't have been for that.
I appreciate it, man. It means a lot. Well, thank you guys for being here on the Legacy Podcast. If there's anything that I can be a resource for, don't hesitate to reach out. Make sure you're connected with Tyson on social media. We'll share all of his handles and all the ways to get in touch with him right here in the show notes. And we'll see you guys next week on the Legacy Podcast. Thanks, y'all.